Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the video, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video and subscribe to the channel if you haven't done so already. Okay, as far as the week, I had 17 wins, 5 losses for a win rate of 77.27% for the week. You know, 80% is the goal. After last week having a 70% week and having a terrible week, me getting a 77% week, I did a little better. I could have done better, but I took a couple of chances, overnight chance here, and I just made a couple mistakes on Friday, but it is what it is. I did better, I feel, this past week than the week before. So obviously the first half of July I had very strong 2 weeks. So in fact, the July stats I have are let's see, 104 wins, 17 losses for a win rate of 85.95% for the month. So very, very good month despite having 2 fairly bad weeks. So I was kind of hoping I'd have a 90% month, but whatever. Very, very strong month. I can't complain whatsoever. So with that said, we'll get into the recap, going by the timestamps on Twitter, Discord, obviously. Now, let's see, the 25th was Monday, which is what, right here? No, right here. Okay. Trade Eddie's room on Monday morning. It said SPY. Whoops. Oh yeah, it said SPY calls of a 397, which is right. Well, the pre-market high is 397.21, but I like to have it a nice round number. So right in here, this little area right here, as you can see, it's kind of like got a little bit of a resistance right here. So if it did break the 397, it was probably going to end up taking off, but it didn't. It dropped. The first 10-minute candle, I always wait the first 10-minute candle out just in case it ends up being a fake out, and sometimes it just ends up being a double fake out. So you gotta be careful of taking the first 20-30 minutes of the day, because that's where you see a lot of the confusion action, as you can see right here from Friday. I mean, look at this, it just stayed in a chopping little zone for what time is that, an hour and a half. So waiting for the first 10-minute candle to form. I was looking at calls because, FOMC was coming up. They're probably going to run it up into FOMC because that's what they usually do. They usually run it up for FOMC. That way, if it does dump, the dump won't look as bad. That's their idea of a soft landing, I guess. So yeah, once we get the first 2-minute candle to form and it got back over opening range breakout, which is right around the 390, 397. I took it at what time? 9:52. So yeah, that's 9:30. It's 9. Yeah, as soon as this candle broke over here, I grabbed the 39.80 calls at 8:20, and they went from 8:20 to 9:20. Only got $1 out of it. Glad I took it. Get out. And then it ended up reversing. Then I switched sides quickly at 9:26, which is down here. Still in a little area where it can't get really out. I mean, it tried to break out and got shut down. So I waited for it to get down here near lower day, down near the 394.50 area, and that's where I took the 39.40 puts at 750, and they went from 750 to 950 in that drop. SPY just staying in its little channel, not really breaking out of it. Once it does try to break out of it, it gets shut down quickly. Anytime it breaks below the lower day, it gets bought quickly. It's just range days so far, and it's kind of too early to call range within an hour and a half, because that's where it usually does this kind of move right here. Makes a little range, then just flushes. So then I switched to calls at 10:56, which is right here, I think. Yeah, 10:56 right here. Okay, tried to break out here. Just make sure everything's working on the mic. Yeah. Tried to break out here, got shut down. Play puts here, got bought up, popped back up near a higher day again. It came back. Then when it popped up again, this is where I grabbed it. I grabbed 39.80 calls at 650. Then it dropped down after it. Then when it dropped after I got in, literally I think after I got in, that I added more at $3, make my new average 475. Then it popped back up and I was able to get out. So 475 to 750, almost 100% play right there. I mean, I was looking at the call angle anyways for it to bounce for FOMC, and like I've been saying, it can't break out, it can't break down, so it's either going to stay in the channel. That's why I averaged down here near lower day, because if it stayed in the channel, that I'd be able to get out up here. So that was my game plan. Was the channel was going to hold, and that's the thing that's really tough about buying in a range, is that you need to buy calls at the lower day and you need to buy puts at the higher day. It's so dangerous to do that, because if you buy puts at higher day, it can break out. If you buy calls at lower day, it can break down. And this market is very bipolar. It can do whatever it wants when it wants, and it's just a crazy day. So then on Tuesday, let's see, what did I say in the trade editors room? SPY puts under 393, Walmart puts under 119, and this is where Walmart had I think they had their earnings. I have to look at the chart. Where is Walmart? It's that they had earnings on the 19th. Yeah, it is. Let me see. Yeah, the 20. Let's say the 19th, the 26th. Yeah, had earnings. So retail took a massive hit. So I took SPX puts at let's see, 9:45. As soon as the 10-minute candle formed, as you can see right here, what was it say, 393, which is this lower day candle right here, and it's a nice round number. I always average to round to the average whole number, so or half number. So once the 10-minute candle fully formed, I did grab puts right here. I grabbed the 39.20 puts at 640. And they went from 640 to 760, and it bounced back up, and I reloaded again. Okay, I'm gonna have to go down to the minute, because it looks like I reloaded twice. Might have to. I don't use the 1 minute. I'm just doing it for so you guys can see 4 days. Okay, this is the right day. Yep. Okay, I gotta look at the actual alert, because they're blended together. I hate that when it does that. First one was at 9:45, and the second one was 9:50. Okay, 9:45. Right here is where I took the breakdown, and at 9:50 is where I reloaded, which was this candle right here, and I ended up selling down here. And what was the other one? When I reloaded, it was at $5. So yeah, it was up here, because the first time was down 9:45 right here. And I sold into this. Then when it popped back up, I reloaded. Because of Walmart missing, I thought for sure the market was just going to keep dumping. So anytime it popped, I was going to reload the calls, and I did at $5. The same recalls, reload puts, and I did at $5, same ones, and they went from $5 to $5.90, and that little dump right there. Then I took them again at 10, which is right here. Same ones, 39.20 puts right here, 10. Go back to 10 minutes, see if I can see what I was actually looking at. It's hard to tell on the 26th right here. This is the 10 o'clock one right here. Right when it came back down, right down here, I thought for sure this was going to be it. So I reloaded the same 39.20 puts again for the third time at 6:30, and they went from 6:30 to 7:20, just getting little 50-cent to $1 plays out of this. Then I took puts again at 10:14, which is right here. This time I got 39.30 puts at $9, and they went from $9 to 11 right there. So basically, when it broke right here, I took puts, sold it, and it popped back up. I reloaded, sold it, popped back up, reloaded, and sold it, because I was very certain that because of Walmart having a really bad miss, she was showing signs of retail slowing and the economy really worse than what the government's telling us it is. So when Walmart misses huge, that it's really not that good out there, because look at the type of people that go to Walmart are usually lower to middle to lower class people that are on a tight budget, that live paycheck to paycheck. So when Walmart misses and people are spending less money there, then you know something's wrong. Plus, people that are buying there are probably using their credit card and racking up credit card debt, which is not good in the long run either. So then at 12:16, I took calls, which was right 12:16 right here. Why did I take them there? What day is this again? The 26th. I took them all because I see right here on the hourly. You can see right over here on the hourly, you got this 389, 390 area. 390 being a pretty big number. And if I remember correctly, the SPX and ES was right at the 3900 area, and that's where it would be a good bounce. Nice big fat round number, 3900. Algos are going to jump in and start buying and try, even if it's for a small little bounce. So started to bounce. I waited till 12:16 to make sure it was going to bounce. It got these two candles to form right here. Once it cleared those two candles, that's where I grabbed the 39.30 calls at 610, and they went from 610 to 840. Then I grabbed calls again at 306, which is right here. No, that's 306. Right in here. I think that when it went back down to 3900 again, started to pop back up and came back down, I think I grabbed it right in here, or when it was starting to come back up the next candle. Right in here is where I grabbed it. So like I said, I had the 390.10 calls at 770, and they went from 770 to 1165. So Monday and Tuesday, very, very strong. Let's see, I think I'm flawless at the I took no losses so far. Then I had FOMC. And FOMC, I think this was the first FOMC that I actually took a loss on in, I think, a long time. I think I've only taken one or two losses. This might have been my second one, if anything, since the room started. I do remember one time that I took FOMC and I did lose on both sides because it was very, very, very flat. But this one was one I just got wrong. And usually FOMC, you get one move, you get like 2 to 3 moves. The first move is usually the wrong one. Is you get the initial reaction within the first 5 to 10 minutes. Then the real reaction ends up happening after the fake out. Then you get power at 2:30, which could add to another third reaction. Then you get the end of the day, which regardless of what's happening, that could end up being a fourth reaction. So and that's how you have to look at FOMC. And I didn't take any trades. I've been staying out all day long because of FOMC. Usually it's very, very choppy, but lately it's actually had some pretty decent moves before FOMC even starts. So maybe the next FOMC I won't sit out. Maybe I will try to play something. I don't know. We'll see. But pre-market on FOMC, even though I wasn't trading anything, I told everybody I wasn't going to. I said SPY puts in a 399.50. Wait a minute. 399.50. That must have been, yeah, that was, I didn't even put out a pre-market plan. No, I didn't. Okay, no trade ideas pre-market on FOMC. I did make it clear that I wasn't trading to FOMC. But the FOMC play was I grabbed SPX 39.30 puts at 710 and 40.10 calls at 690. Now, as you can see, The first 10-minute candle, it dumped. So actually it popped up. Let me go down to the 1 minute. You see what happened. It popped up. I sold the calls in the pop because I thought the pop was the initial play, where it's 2 o'clock right here. Okay, we can see what happened. Now, the last few FOMCs, what the strategy has been that, not the strategy, but the play has been, it will dump, then it will pop all day long. And that's been what it's been happening in the last few FOMCs. The previous FOMCs, it's been a pop and a drop. So that's why you got to understand the first move is usually a fake out. So this was 2 o'clock right here. As you can see, it popped on the initial reaction. So I sold calls. So I sold my calls at $10. So I got them at $6.90, $10. They looked really, really good. Then it dropped. Then it popped back up. It popped up. It stayed elevated for a little bit. Then right when Powell was getting ready to talk, it started to dump. And I thought for sure, in fact, I could have got out of my puts right here even with a little bit of profit. But I thought we were going to get a massive dump. And then when it popped up a little bit, and we had didn't have much reaction, didn't have any really fall through. Then it dumped again right when Powell was getting ready to talk. I thought for sure we were going to dump, and that's why I held my puts, and that was my strategy. We had the initial pop right here. This was the fake out. I sold the call. That's why I unloaded the calls. That's why I held the puts. Puts were green. They weren't. Then they were green. Then they just said bye-bye. That just ripped and took off. So 75 basis points was the rate hike. It wasn't a full point like many expected. And the economic numbers were not good all week. I think that we had I have to look back to see what numbers we had this past week. We had GDP. Let's see if it shows the previous day. Yeah, we had GDP on Thursday, which was really, really bad. That didn't even happen until after FOMC. There was nothing about an FOMC. I thought maybe there was some kind of economic numbers that came out FOMC morning, but they didn't. They came out afterwards. And another thing to keep a note of with FOMC is when it has a strong green day on the day of FOMC, the next couple of days it likes to fade. So I like a lot of statistics. I do like following them, and a lot of the times they do add up. But anyways, FOMC, that was the play. I sold my calls here. I was expecting a dump here. It just didn't, and it just turned around and ripped. So didn't work out, whatever. I did do well on the calls, but I took a little bit of a loss on the put, so I ended up turning red on the play, not too much. Then I took puts at, let me get back to the first 10-minute candle, 10-minute chart. Then I took puts, I tried to step in front of this thing, and I took puts at 308, which is right here. I took it at the 400 level. 308. No, I took it right here. I took the 40-10 puts at 570 at 308 now. Let me try to think. There was a reason I took it here besides the 400 level. Oh, gap fill. As soon as it made the gap fill right here, I took it. Yeah, gap fill was 401 and change. That's where I ended up taking it right at the gap fill. That's why I took it there. I didn't try to. I've learned from other FOMCs not to step in front of it and try to pick a top, because you're just going to get run over. So what I did was I waited. I thought for sure on the daily gap fill, when it made the gap fill, that it was going to get a reaction, and it started to react a little bit, and then it just popped huge. It was just acting really, really stupid. So yeah, I took a loss on those puts. Then I was like, okay, at the end of the day, at 328. I ended up taking 4,000 SPX puts for the next day, the 28th. So I bought it at, let's see, 328, which is right here, right after I filled the gap. We had this monster squeeze, and I grabbed the next day puts, thinking the same thing like I said a few minutes ago, that strong green FOMC days end up leading to Thursday and Friday fade. So with that said, after the gap fill, we had this squeeze. I grabbed puts for the next day. I grabbed them at $12.20. Then it dumped, and I said, okay, I'm going to take it. I mean, I'm up $2 and some change. I'm going to take it. I'm not going to take a chance and hold overnight. Anything can happen overnight. So I did take it, and they ended up going to 14.50, but I think after hours it went to like 17 or something like that. So did end up taking a nice little play on that. So did make up for the other loss. So the loss on Wednesday was not that bad. The end of the day puts definitely helped a majority of the loss. So yeah, I am glad I did take it because it gapped up a little bit, and I don't know where it was the next day, if they were actually green or not, but yeah, definitely happy that I did take it. So, but I did take it overnight through earnings on Amazon and Apple, which was not a very good idea, but I'll get to that in a minute. Let's see, on the 28th, now like I said, Thursday and Friday usually red days, quote, usually red days after FOMC on a green FOMC. So trade ideas room on the 28th, Roku calls over 88 and SPY puts under 400. Now I broke 400 on their we got the first 2-minute candle right here, which didn't do too much. It kind of rejected FOMC's higher day. So as soon as the first 10-minute candle formed, that I grabbed 4,000 puts at $5.40, and they dumped and they went to $18. Now if I held overnight, they would have definitely turned green because I bought them at 12. So, but glad I did sell. No regrets there. So yeah, I took the play 540 to 18, 200% move right there. Nice play. Then I ended up taking puts again, 4,000 puts at 1038, which is right here with this nasty move. Tried to bounce a little bit, then it came back down. I grabbed the 4,000 puts right here at $8.90, and they went from $8.90 to $11.50. Now the reason I bought it here, it started to react a little bit on the 200 EMA. It bounced up, came back down, and bounced up, then it started to come back down again. That's where I grabbed it, thinking we were going to fall apart, because I was thinking a deep red day for after the FOMC run up, and we had GDP numbers, which were really, really, really bad, and we had really bad numbers. We had bad news all day Thursday and Friday, and the market did not care whatsoever. Now, it's kind of hard to trade a market that's broken from reality, or broken from the actual news that comes out, because economic numbers and politics move the market. So when you're having bad numbers come in, and really bad numbers, that the market's not really caring. It will care. It's just a matter of when. Market doesn't care, only cares when it wants to. And what usually happens when the market goes against bad news, that eventually it will drop, but it will drop on a really fluff headline that shouldn't really react to it, and it will just change the narrative of the play. Then the media will turn around and say, oh, after digesting the FOMC, or after digesting this news, they realize it's not as good as we thought, and they come up with some kind of bullshit excuse why the market's dropping, and instead of yeah. Anyways, so yeah, the market was just ignoring. Why is this? I'm gonna have to pause the video. I think this is not moving. For some reason, TOS is frozen. I'll have to pause it for a second. Okay, my session expired on toss. That's so stupid. Let's see. Did I grab the puts right here? Okay, then I grab puts again at 1050, which is right here. Right near higher day is where I grabbed 4010 puts at 790. Then it popped up here to higher day. I added more at 1103, which is right here. So I had a legitimate reason to grab it here. Bad numbers. Market had a little bit of a V rally. Okay, we got right at the RCT trend line. We're going to reject here. So I grabbed puts right here. Popped a little bit more. Then right when we got to higher day, that's where I did add more. And it just rocketed through it. Then I decided to add more again at 1121, which was right here when it started to come down. 1121 right here. Thinking we're having a fake out breakout. I just ended up taking a loss on that. So then I ended up taking puts at what, 1131. I took closer to the at the money, 1131, which is right here. Okay, for some reason I added 1121. Let me just know why I did that. 1 minute. I'm having a brain fart. Okay. I mean, I had a reason behind what I was doing. So 1131, I added 1121. Where's that? Right here. Oh, that's down here still. Okay, that's down here at the higher day. That's where I ended up adding more. 1103 right here. Yeah, so yeah, I get why I did it here, where I was adding here is at higher day. I was not expecting to break out, especially after really bad GDP numbers. Then it pops. Then at 1103, 1131, that's where I took a new set of puts, the 40-45 puts, because at first I was at the 40-10, and that was just too far out of the money. So I decided to go closer to, actually I think I might have been in the money or at the money, 40-45 puts at 1050, and got that little bit of a drop right there. And they went from what? Wait a minute here. 1, 2, 3. Oh, for some reason I missed the 1050. So I put 790. I don't know why I did that. I didn't go to 7. I don't know. Anyways, wait a minute, 425. I'm just looking at what I do here. I don't know. Somehow I missed this one, but yeah, I go to the 1050 and I'm not sure what it went to. I'm sure it probably went to at least $12 plus or something like that. So on that, so that was a nice little thing. I kept just kind of trying to pick the top because of the bad GDP numbers. I just didn't think that the market was going to had two things going against it at this point. I mean, in my eyes, the FOMC with the red days after it and the bad GDP numbers, I thought for sure we were going to dump. So I took that play at 1131. Then it popped up again. I grabbed, I didn't grab puts right there. I grabbed them at what, 1203, which is right here. 1202, yeah, right here. This is where I grabbed it. Popped up because I played that right there, and it popped up, came back down. It didn't break. It came back up a little bit. Then when it did break, this little area right in here, this 403.60 area, that's where I ended up grabbing the 40-45 puts again, this time at 790. And they went from 790 to $12 on that play right there. Seems like I went kind of far for that. 790, I had 790 at $12. That's what I had. So then I've had, let's see, I took them again at 139. Why 139? Right here? Oh, no, 139. 139. Why did it take them here? 405. I think there was something on the daily that was. What was the 405? Well, this resistance right here. I see it right here. Get this candle right here, right here, right here, right in this area right here. This is where I took the 405 puts, especially after bad GDP numbers. I thought for sure we were going to end up getting a 139 right here, right up here, the 405 50-ish area. The 40-70 puts at 920, and they just didn't go anywhere. They didn't go anywhere. They didn't go anywhere. I thought for sure it was going to dump. I was going to dump. It just chopped and it popped up, and it made this little new high a day breakout right here. This is where I added more. I added a bunch more at 260, making my average 425. I held on to it because we were so close to the money. I thought for sure we were going to dump. Then it just chopped up. It made new high a day. Plus, after bad GDP numbers being up $8, it broke out again. I took the chance. I added a bunch more at 260, and my new average was 425. Then it managed to drop to $5, and I got out. As soon as that thing turned green, I got out and escaped the loss. So I was really thinking that we were going to get a massive end of the day dump. Just crazy how this day ended up. I mean, this run probably could have been more or less hopium on Apple and Amazon earnings, and I don't know why. It was making a run because Apple was having some sales, some unique sales showing they were desperate for money, desperate for sales, and that doesn't usually look good before an earnings report. And with Walmart missing, Amazon could have missed big too. But for some reason, the market just likes to run on hopium. And regardless of what's happening with the FOMC, QT is very, very minimal right now. The balance sheet is not really going anywhere. Rate hikes are, not as severe as I thought they would be. And they're just, the inflation, regardless of what they're saying, is still going up. I don't really care what the government says. Inflation is going up until they actually have proof that it's not. I don't take anything the government says at value at all. So, we're definitely going to see inflation flattening and coming down. I think it'll probably end up being the next month or two. Maybe the market's looking that far ahead. So I don't know. I'm just speculating. But anyways, I had reasons to do what I did on this play on this day, and I wouldn't change anything I did, except for I did take it overnight play. On Thursday I took, I took SPX 50 puts overnight. I took them at 12.10. I only grabbed a couple. I did not grab a lot because of Amazon and Apple earnings. And lately what's been happening is that Microsoft had a miss, and they for some reason it got bought up, and the misses have been rebounding, and the beats have been selling off, and so there's been a lot of misses, so there haven't been that many beats. So taking puts overnight was a risk anyways, like I said, with Amazon and Apple did manage to beat, except that Apple did burn through a lot of its cash, apparently. If I was looking at it right, they did beat earnings, but they used up a lot of cash, so who knows? You take it either way. But yeah, these puts overnight, they were gone. They were toast. Now, as far as trade ideas room on Friday, Amazon calls over 136, buy puts under 406. Now, Amazon had earnings. It had a monster beat, which is very, 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 very surprising. I thought for sure they were going to have a huge miss, like Walmart. Usually Walmart's a pretty good indication. First terminal candle formed right here. Took calls right over the first terminal candle breakout. So I took the 136 calls at 140, and they went from 140 to 230, almost 100% move right there on that play. You got to take what it gives you. I mean, if you sit there and think it was going to kill you, you know, when I bought the 136 calls or at 140, I should have gone with like 135 or 134 in the money. They would have been in the money and probably paid a little better, but whatever. It is what it is. So then I took SPX puts. Whoops, so I actually typed in SPX. I took SPX puts at 1132. 1132. Right, I missed that. I missed this. I think that I wasn't looking when this happened. So point to VWAP, bounced back up a little bit, then I broke below this area right here. As you can see, it popped up. Let's see if I can blow it up a little more. Popped up. I missed this. Then got the VWAP and 20 EMA, which is the blue line, together. I don't usually like to buy puts into that because when they're together, that usually ends up being a strong bounce. But in this case, it didn't bounce hardly at all. It went under, it came back up. Tried to drop a little more, and it came back up. Then once this candle formed right here, and it came underneath this area right here, this 40, let's say 409 area. When it got below 409, that's where I ended up grabbing puts. I grabbed the 40-80 puts at 570, and they went from 570 to $8 right there. Then I bought puts again at 1209, which is right 1209. What did I buy right here? 1209 right here. Oh yeah, I remember this. Yeah, it dropped right here. It quickly got bought up. Then we had this big this red candle right here. It dropped down right below VWAP, right below this 409 area. That's where I jumped into 4100 puts at 950. Thought for sure this was a lower high. We were going to dump, and it quickly rebounds. Right after I get in, it quickly rebounds. And then I end averaging down at 1257, which is right here at high a day. I added more 270 Mega, averaged 370, and then I ended up taking a loss, and it just started ripping the rest of the day. Just acting stupid. Was there news? Yeah, we had core PCE price index at 830, which came in higher. Revised consumer sentiment. No, okay, we didn't have any news. I'm not sure why. I think it just broke up because I wanted to. I don't know. But yeah, it's just I grabbed it right here, thinking that we were going to go make a lower high. It was making a lower high, and we were actually going to dump. Then it quickly rebounded. So I was like, okay, higher day is where I'm going to add. Reject higher day. Started to a little bit, then it just took off. So I mean, I get most of the plays I took. I had reasons behind them. I mean, I get why I took it here without a doubt right there, lower high, and I get why I added there. I'm not saying it was the best move because it wasn't. And the only one that I did, the loss that I took that I probably shouldn't have, I'm not going to be playing overnight plays anymore, especially with SPX or SPY. I shouldn't have taken that. I shouldn't have played that earnings gamble. I don't play earnings. I hate earnings because it's literally a gamble. You don't know, and even if you play a strangle, most of the time they end up going flat on both sides and you take a hit on both sides. It's just not worth it. So I could have taken one less loss if I didn't take that overnight play. And as far as this day, I had many reasons to do what I did here, and I get why I took the losses here and where I did. So it just is what it is. The market's just gonna go do what it wants. It only cares when it wants to, and eventually it will catch up with it. So I wouldn't change really what I did this past week. I mean, only one mistake one trade I shouldn't have taken, and other than that, I'm pretty satisfied with the week. Hopefully next week will be better, and I'll get back over 80-85% again and have a strong week. So that's gonna do it for the recap. I hope this has helped. I know I rambled a lot, whatever. That's just me, I guess. And thanks for watching.